Let's kick it off with a look at the consumer, you and me out there. We were muted in April. Retail sales coming in flat for the month versus the growth expectation of 0.4%. That's according to the Commerce Department here, as you're seeing the all items index data, plus the data furthering some concerns about the strength of the consumer as interest rates remain at a 23-year high. Digging into some specific categories here, the biggest declines came from non-store retailers, sporting goods and hobby stores, and motor vehicle and parts dealers. But Michael Pierce of Oxford Economics says the downshift here in spending growth in April can be entirely attributed to strong showings in March, which he thinks is a combo of Amazon's big spring sale and an early Easter, both of those boosting spending in the month prior. We'll continue to monitor the strength of the consumer as the Fed considers inflation and the trajectory of interest rates as well. But turning now to today's CPI, the Consumer Price Index report, and it showed inflation came in lower than expected on a headline basis. That means overall, the monthly change in prices paid by you, the U.S. consumer, came in a little cooler than what analysts had anticipated and economists out there. And we're seeing some moderation in the level of inflation in April versus March. So we want to dig into three areas where we're still seeing some sticky prices. And here with more, we've got Yahoo Finance's Alexandra Canal. Hey, Ali.
Hi, Brad. Yes, unfortunately, there are still areas where prices have remained elevated. Shelter and gas, certainly two of the biggest contributors to overall inflation. But we also saw sticky prices in apparel. So our shopping trips becoming a bit more expensive as well. But I want to kick things off with gas. Those prices at the pump just not letting up. Gas prices rising 2.8% from March to April after climbing 1.7% the previous month. Now, the good thing here is that economists have said gas prices have actually fallen in May as geopolitical risks to higher oil prices have eased, at least for now. So that should help the inflation picture moving forward. Besides gas, shelter has also been consistently under pressure. The index for shelter rose 5.5% on an annual basis. This was a slowdown from March, but shelter is still the largest factor in the monthly increase in core prices. Now, those are prices that exclude the more volatile categories like food and gas. Meanwhile, the index for rent and owner's equivalent rent each rose 0.4% on a monthly basis. And for reference there, owner's equivalent rent is a hypothetical rent a homeowner would pay for the same property. These increases did match what we saw in March. So shelter, gas, these are two categories you've heard me consistently harp on as we've gotten these inflation reports, and obviously still a big problem area for consumers.
I mean, it's not just these big categories that saw increases last month. You also mentioned our shopping carts becoming a bit more pricey. So what did we see there?
Yeah, so apparel is one category that jumped out to me. Prices there rising 1.2% month over month after just a 0.7% rise in March. Now, this was by far the largest increase we've seen in this category so far this year. Besides apparel, there were other categories that also saw notable upticks in prices like motor vehicle insurance, medical care, personal care. So again, all categories that we as a consumer often touch every day of our lives, which is why the consumer has been so squeezed. And I think the retail numbers that we saw this morning really emphasize that point.